Hi, it's Ken here from Smart Forex Education. Just a very quick one. In today's session, I wanted to inform you of a very strong and effective trading setup that has arisen and how you can take advantage of it trading the euro dollar or any Forex pair. Now, this is the euro dollar chart on a daily time frame. So what I've basically done is I have drawn in a trend line. So it's a standard trend line which is a downtrend line, looking for some form of resistance. Now, this trend line was taken from the high of October down to the high of what we're looking at here, the Friday. Okay, so it was Friday's high, and then what we saw yesterday, interesting, is that the price tested the high, as you can clearly see, spiked above the high from Friday. Okay, and then we saw the sell-off. So one thing that you need to be aware of when you're trading is do not get sucked into certain trades. For example, on a breakout. So if I brought this down into a smaller time frame, the setup play really occurred, which is very, very transparent, based on this theory. Now you can clearly see that the price yesterday broke towards new highs, and it was new highs since the 28th. Okay, so it failed to break above the new highs for March, but it was literally about, it was about 10 pips away from the high of March, but it broke through a week's high. And all you could have done, and this is how to spot when there's a lot of newbie or inexperienced traders looking to try and enter trades based on a breakout play, is to identify whether the market can close above the high. It's quite simple. Now try and do this. Scroll down to a 30-minute time frame. Now this is a bit of homework for yourself. Go to a 30-minute time frame, okay, and then just draw in a resistance trend line. Okay, so a resistance trend line from a high. Okay, so you can see I've just drawn in a horizontal line here. And if you were watching the market at this specific point, a lot of traders were entering the trade based on the breakout. Okay, so if I draw this down very quickly. And we can generally say newbie traders entering on the breakout. But what you need to do is to try and identify, and this will come from practice, this will come from experience, to be patient in these trades. Do not just enter a trade because it's breaking into a new high. You know, I spot this. I can spot myself trading since 2004 professionally. I can spot when inexperienced traders are entering. So to prevent you from entering into these trades to the upside with a lack of movement being pushed by the commercials, the institutions, just be patient. So just wait for a 30-minute bar to form as a heads up. This is a heads up, okay? If the 30-minute bar forms below the high and then it shows some form of a candlestick reversal, then you know that this could be a potential flush setup. So let me just show you here. So this is a 101 on my flush trading setup, just based on pure price action. So we have a flush trading setup. So what I'm going to do here is the flush trading setup play will be based on waiting for the 30-minute bar to form. So what you're doing is you're becoming a more patient trader. You're not just entering a trade to the upside, you're waiting for the candlestick pattern on the 30-minute initially as a step one to form. And if the candlestick form, if there's a spike up but then there's a sell-off and it closes with some form of reversal candle, then you know that traders that entered on the high are now caught out. Because individuals that enter the high, they probably have a stop with 10, 15, 20 pips below the price. And what the professionals will do, they will start and look to try and hunt for those stops and try and flush out all of those trades. So hence, you can clearly see what happened here. You can see that there's a spike up to the upside, sucked in some buyers, and then we saw a sell-off. Same scenarios occurring here, right now, today's market. Just draw in another horizontal line, okay? Very simple but effective. Just draw on a horizontal line from a previous high. This is on a half-an-hour chart. You can clearly see there's a bounce, spike, broke above previous highs, short-term highs for the day, sucked in some traders, and now we've seen a reversal candle, okay? A shooting star of sort. And it's flushed out a lot of the traders that entered around 13364. Their stops were around maybe this area. Okay, stop levels around 13340. So they're already stopped out this trade. So if you were smart and you entered on the close of the half-an-hour bar, you'll be in some form of a small profit right now. And then you need to then do is look for targets. So targets using the simplicity of trend lines, targets using Fibonacci, all these areas. But the moral of the session today was just a quick update to show you to be patient in the market. Okay, do your due diligence, make sure you prepare, and by preparing, you'll be able to be proactive rather than reacting to certain situations. Put yourself in a position as a professional trader and try and understand more about people like myself, how we identify these trades, how we spot newbie traders. Okay, that's just a quick one. And good luck with the trading, and I'll speak to you very soon. Take care.